Welcome to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson. And if you notice, I don't have the blue background anymore. I did move companies, and we're getting a new podcast room set up in the next 60 to 90 days. So, looking forward to that. But in the meantime, I have a guest that's very important to me. Reason being, he was the one that mentored me when I first got in this business. It's Steve Furlong, SWBC Mortgage. Welcome to the show, Steve.
Thanks, Brandon. Excited. This will be fun. Great
Yes.
topic.
Yes. This is going to be great because when it comes down to someone that knows in detail, um, we're talking about discount points, which we'll get to in a minute, or we're just talking about other guidelines and programs that we can use, you are the man. You know those through and through. And get very detailed about it, and which is very helpful. Was super helpful for me in my career to start off with, and kind of propelled me to the next levels. So I'm glad you're here, and today let's talk about the market, right? From specifically this sales side. And this is, by the way, this episode is more geared to listing agents and real estate agents overall. So let's talk about why is your house not selling, and what can we do, right? So what was the days on market right now? Is it 38, 39?
Yeah, I just pulled up the Minneapolis Realtors weekly activity report, and it showed 39 days on market. And then the month supply, I think, was 2.8
Yeah, I
months.
believe it's 2.8 months,
And
right?
those are probably the longest since 2019.
Yes,
I mean, pre-pandemic numbers.
right,
And it's great for us because our clients are desperately looking for a home,
right.
and they multiple offers and that kind of stuff. So there's a change.
Yeah.
It's not just fall, it's not just the leaves, but the market's changing. And for now, at least, we'll see what happens in the spring. But it's the point of that is it's maybe getting a little bit harder to sell houses. Like, what, you got to put a sign in the yard now, right? Is that
Yeah,
yeah?
I believe. Yeah, right. You got it. Now you do have to put the sign in the yard, right? Um, well, in nationwide, I know I saw it because I subscribe to MBS Highway, and so I listen to Barry Habib every day, and I know we're pushing like four months nationwide.
Wow.
So Minnesota's at 2.8, right? So four nationwide is pretty big. And now that does take into some of the places in like Florida or Texas that really went heavy on like Airbnbs, VRBO options. So people bought all these places and now they're trying to sell them, right?
Right.
Because the rules have changed on those quite a bit. But anyway, just getting back to, okay, so why is it? Yeah, I mean, this time of year it does typically take a little bit longer. This is my favorite time of year for my clients, specifically the last five.
Right. Because the old adage, you buy a boat in the fall
Right.
and you and you sell snowmobiles in the fall. You
Right.
buy and you sell a boat in the spring. Same with housing, right? So buying a house in the fall is more relaxed. There's more choices, fewer competitive multiple offers. So it's a better environment for buyers. Sellers are more motivated. Winter's approaching. They're like squirrels collecting nuts right now. Like, we got to sell this house. We got to sell this house.
Right.
Just get us any offer, right? Some of that. Um, so I think that we're probably entering maybe a little bit of a new era in a way where interest rates now are the norm. The super low interest rates that we had spurred a tremendous amount of activity, and that was artificial because the Federal Reserve had a policy of buying mortgage-backed securities and artificially decreasing rates, and so that policy now is by the wayside. But we have potentially, new housing policies. I've heard talk about credits for home buyers. I mean, there's things that we don't know yet. I don't know if I'm necessarily in favor of that, but there's things that could happen policy wise that could bring it back again and make it really, short. We're not building more houses. We're not building enough new inventory. But there's this boomer thing about the wave of inventory coming from them. So there's all these like weird factors that are constantly going to make things change. So you have to adapt to what the current environment is. And today's environment is we have growing inventory and fewer buyers of interest. I mean, I heard from some of the top producers in our company that their numbers are low. And this was their way of excuse after I beat them. Their numbers were low because they don't have enough buyers right now. It's like, what? You don't have enough home buyers. Like, we have homes to sell, people can buy, but there's no buyers.
Right.
And I'm like, that's so weird for us right now because we just can't find the houses for our clients to buy.
Right.
But I feel like that's changing. And so as a listing agent, if you have a home that's on the market for 30 days or more, what do you do?
That's exactly what do you do? What our options are. I mean, the first ones are, well, we do a price reduction, right? Well, is that always the best benefit? I mean, because it does, once you get that, does spur, hey, let's do a price reduction and an open house, right? And then does spur activity, right?
Mm-hmm.
But what other options, like, what other options have you come up with? And I think our company also has a great program now for it. And that's like where we can lock in a rate for a customer.
Yeah, I think that program is serendipity. It's called the Listing Advantage Program. I don't want to make this an SWBC commercial on the program, but I think one of the things you could do. So you and I were talking. I'm not going to talk about hiring spacecrafting to turn the leaves, actually put the leaves back on the tree, or whatever the photograph things, or additional marketing things where you boost an ad on Facebook or something with the property, and we can go on and about. But I want to be real specific about what I call bridging the gap and discount points and helping buyers with the practical decision and offering a real incentive, a real valuable incentive, tangible incentive for buyers on a particular listing. And it's akin to, I think everybody's familiar with builders, new home builders, what they do with the discounted rates. And builders do something called a forward commitment where they pay a lender to then buy down to that rate. The builders pay a fee and they buy down to the rate. And what I think a lot of people don't realize is that any individual seller can do something that's just pretty much the same thing
Correct.
using discount points.
Right. And why is this so important? You said something before this that hit home is, buying a home is very emotional, right? You go out as a buyer, you're with your agent, and hey, you got a schedule to go on Saturday morning. You go look at this house and it's a beautiful house. It's like, oh, everything you want, and you get all excited about it. And maybe it's at the top of your price point, or maybe it's even above that. And then also you talk to your lender, and also that emotion's not as emotional anymore. They're not as excited because, oh my God, that payment, we're paying $1,800 right now because we got a 3% interest rate, on a $350,000 home. And now we're looking at 600, and this payment is considerably more. Yes, we can afford it, but now the emotion, that the happiness is not exactly there anymore, right? So
Right.
how do we bridge that from the listing side, right? How can you help bridge that, and hey, like, help that?
So we have to show buyers what the financing options are.
Right.
We
Awesome.
have to show buyers. And so if I'm a listing agent, I am working with my loan officer partner to create financing options on my listing that show the lowest possible interest rate that can be done. And there's a cost to that. I mean, paying discount points, buying down a rate, there's a cost to it that it might be hard for some loan officers to say there's 4 points that we have to pay. I mean, you laugh, you think that's funny, but I think about a lot of my clients over the last year have paid 2 or 3 discount points because I gave them all the options. I gave them the rate table and I showed them, look, here's what it is at 5.5, 6, 6.5, 7. We were at 7.5. We even touched 8 on some of these tables over the last year. And now there's ways we can touch 5. There's ways I see some of the builders still touching in the 4s on 30-year fixed loans. These are not temp buy down deals, which is a whole different topic. And I that's not what I'm talking. I'm talking about a permanent buy down with discount points. And part of the disconnect is that even loan officers don't know the maximum number of discount
Discount
points that a
points.
buyer can pay.
Right.
There's this QM, not to get into the rule book here, but there's this QM 3% point and fee test that the CFPB has. And the reason why a lot of loan officers don't know this is because this guidebook is like 700 pages long. And, okay, yeah, I've read it. I did. But there's a little segment in there about bona fide discount points. Now, if you're a loan officer, turn this off. I don't want you to know how this works. Just call me, and then I'll talk to you about why you should work with us, and I'll help you with your business. But no, in jest, in reality, 2 discount points can be bona fide and excluded if they meet a test. There's a test that has to do with the APOR, the average prime offered rate, and the amount of rate discount for points. So 2 discount points can be bona fide and excluded. The seller could pay up to 3%, even 5%. One of our programs allows sellers to pay up to 5%
5%.
in IPCs interested party contributions. So you could do 2 bona fide, 5 seller paid. So that's 7. You can add 3 more. You could go to 10
10
discount points and still fit within this rule. Most loan officers don't know this because I surveyed the 300 or so in our company once, and I said, put into chat how many, what's the max? 3, 3, 3, 3, 3, 3. And it's not 3. You can go more. And so let's say it costs 5 points to get to 5. So we do this break even analysis and we can do this whole calculation for a buyer and show them this is a good deal for them.
Right.
So
So instead of taking a discount on the house, they can still sell it at the higher amount, right?
yeah, you can sell it for more. Let's say it's listed for 400. You could sell it for 410, give the buyer 10 back, and it's a win, 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 win. How many wins did we count? 7 wins,
But
right?
7 wins.
Yeah, it's like a 7 win all the way around because you get a much greater bang for the buck paying for discount points as a seller than you do reducing the price. And let's do the math on this. And I'm going to be generic here because interest rates change all the time. So I can't be specific, but on a $400,000 house, if you reduce the price 10 grand, it will lower that buyer's payment by how much? 10 grand is like
10 grand is going to be what, $70 a month?
$70 a month.
Right.
If you put 10 grand into discount points for that buyer, it's going to change the payment by like 200, 250, maybe 300. The bang for the buck is massive paying discount points. But we have to convey, this is somewhat complicated. If you're already like, what is Furlong talking about at this point? It's somewhat complicated. So you got to work really closely with your lender. And that's what I love.
Right.
Little secret here. What I love about this environment is realtors are going to need us again. You need us
Yeah.
again. You need our help. And we're happy to help. Brandon's a great person to help. You need our help. And so you need to work with your loan officer to convey this information to buyers. And so what would I do as a listing agent? I would get a financing sheet specific to the property. It would have the lowest possible interest rate on it. How low can you go? What's that game you go into the bar? How low can you go? And then options. And then what's the par rate? And get this for every open house. Get it on supplements. I would get it out to every agent that is showing the property. So back to the theory. I think this theory, you and I are experts on this theory, about as expert on the expert level as Hawking on the theory of relativity, right? So here's a theory. Buyers, they walk through a house because we get this all the time, right? They walk through a house, they make this emotional decision to buy the house. So you've sold the house. Accept that. They go home that afternoon or that night. They call their loan officer. They go through the math, and then they make the practical decision that it's too expensive.
They're not going to write.
And they didn't know because their lender told them the rates were 7% or 6.5%, or whatever the rate is. And they don't know that they can get a rate that's 1.5%, 2% lower than that. And they don't have to pay for the whole thing because it can be negotiated in. We could come into this equation between a listing agent and a buyer's agent and help negotiate this and provide the options to the buyer so they know that they can finance the property at a much lower rate and maybe even work it into the numbers where the seller is splitting it with them or something.
Right.
You know, if it's 5, a buyer is going to really have a hard time swallowing 5 discount points, especially the typical buyers. You know, we're working with Minnesota housing programs, down payment assistance, and there's some disconnect with those specific programs on this, but we're working with Fannie Mae Home Ready, Freddie Mac Home Possible, affordable mortgage programs, and
where the funds are hard to come up with.
the buyers don't have that much money. They don't.
Yeah. Right.
They don't
And
have
on top of it
5%.
now with the NAR program, where now they may have to pay their buyer's agent.
Maybe, right?
Right?
Maybe
So
sometimes. So they don't have the money. And so for them to it's not very palatable for a buyer to say, I'm going to, I'll chip in 5 points to make this deal work for me. But if the seller pays 3 and the buyer pays 1 and SWBC pays 1 or 2 of these discount points with our grants, now all of a sudden, hey, this is a pretty damn sweet deal for everybody. Win, 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 win.
Right.
Yeah. Now we sold the house. Now we've sold the house with discount points.
And how much can someone save? So let's just say those discount points added up to $400 a month. That's almost $5,000 a year, right?
Right.
And the seller, they didn't have to give up. Maybe they didn't have to discount 25 grand, right?
Mm-hmm.
They only did, it's again, working the numbers, using us to come in and help facilitate that transaction. I mean, that's really what it comes down to, because you said it, you just stole a deal from another lender because they did what?
Did not give options. The
Yes.
bank only said there's one rate. This is the rate. And they did, I mean, they maybe didn't even intend to do that.
They just said, here it is.
They just said, here, yeah, here's your option.
Yep.
And
Payments X. This
yep,
is your rate.
yep.
Right.
And
No options.
the reason why we are doing that loan is because I gave the entire rate sheet all options, payments, discount points, and I'm willing to tell a buyer, hey, it's gonna be 4 points, but here's why you're gonna want to do this, because look at the total interest cost over 10 years, and we're talking about tens of thousands of dollars for the buyer. And so if the buyer understands this and the information gets conveyed properly, they're happy. They could be happy to pay 10 or 15 grand over list and build that in so they can buy the rate down. And for the typical buyers that we're working with that maybe only have 1% in down payment, or maybe even $1,000, that's all they got, and we're using down payment assistance, they're looking at payment,
Right.
payment. How do I get that payment to fit? Or even in some cases, just getting them to qualify. If they
Right.
could qualify, they're buying the house.
Right.
And so you may have people walking through your listing at the open that say to themselves, I would love, this place would be a great home. And I can't, but we can show them how they could.
Well, and how about this? I mean, when you go down that direction, let's just say you pre-approve somebody and you pre-approve them. Hey, you're pre-approved for $450,000. Or no, let's go to the bottom end. Let's go, hey, you're only pre-approved for $300,000. Well, that's not going to get the home I want in the area I want,
Right.
right?
Yeah.
Well, what if the 350,000 is the home that they want in the area? Now we can utilize that
Oh, I love the
same
spin.
method
I love the spin on
same
this.
method. So now that person can now get that 350 home because they do qualify because it's a debt to income.
Yeah.
I mean, that is another approach that
So
as a selling agent,
as a selling agent, you could go to the listing agents and say, I have a client that would buy. Their max is 330. You're at 350. I don't want to whittle it down, but would you guys go to 360 and give us 10 grand back?
right?
I like that idea. Why haven't I thought? I haven't thought of that one. I like that idea.
Hey, that's what
Yeah.
collaboration is.
Yes, right. That's a great way to approach this. I hadn't thought about it that way.
So there's multiple. I mean, there's just being able to show options, be able to. Cause God, I get so many times that's the biggest hurdle, and they just we're gonna wait till rates come down. I'm like, well, we could wait years. We don't know.
We
We
don't. We
have
have no idea.
what's gonna happen,
Yeah.
right? We saw a dip this summer, right? The end of summer, and what has it done in the last 4 weeks? Gone. Just
And that darn jobs report that came out strong. It's and who knows what this, I mean, right today we're looking at a week until the election. So a lot of people are going to be watching this and know what or maybe they won't even know what the outcome is months from now. Who knows, right? Who knows? But
still counting ballots.
anything could change. And so waiting for as an agent, your client's waiting for rates to drop. That's just not a great idea, because we don't know if they will. If they do, home prices are likely to increase as a reaction to that. Okay, so I've been thinking about discount points, specifically how much. I get this question all the time. How much does it cost?
Right.
And so with seller concessions.
Well, hold on.
All right,
Let's,
yeah.
Let's back up.
Yep.
Let's back up. Let's literally talk to. I have a feeling that most consumers, most agents maybe not even know what a full rate sheet would look like, right? Because when you're a lot of times if you're just shopping, you're like, okay, here's a par rate at 7, right?
Yep.
And then here's a 1 point discount, right? 1 point discount. And then here's this, like they get 3 options, right? They don't realize that there's 10 other rates on
Well,
the
each.
sheet,
Yep. They're
right?
typically rounded to 1/8%.
Yep.
So you have 5, 5 1/8, 5 1/4, 5 3/8, 5 1/2. Right.
And there's all a dollar associated. That's the discount points.
Yep.
Right?
Yep. So typically the lower the rate goes, the higher the discount points go. Sometimes there's some anomalies in this table where it's actually more expensive to go to the next highest rate. So I just line those out. Like, hey, it's for some reason the MBF.
Oh, here, you know why that is? Because they found an algorithm that literally is where
APO.
it's gonna say if that person buys, one or so 1.5 or one, let's say 1.3, 1 3/4 rate discount will get them to 6.125. They're likely more to service that loan for 6.125 than they are even at the 6.5 or 1.
I thought that's what
Right.
it was. Duration risk.
It's
Thanks for
yep,
confirming that theory. Yeah,
yep.
I've always thought that. So the whole table, and then so there's a rate, discount point amount, and then a principal and interest payment based on the note amount for each one of those options. And so we convey that table, and then the other important part is displaying the benefit to the buyer and understanding why am I going to pay this. And typically it's about a 3 year break even is what I say. So if you pay 3 points, 5 points, 7 points, doesn't matter. It's typically going to take about 3 years, sometimes four, sometimes two, depending on how it all lines up to break even. And so for and then, so additional part of this is, so if you took a lower rate today, you're less likely to refinance. But if you take a higher rate and then refinance, you have the cost of refinancing too. So sometimes
You're
I
paying it
just
both
say,
one way or
you're
another.
paying one way. So sometimes I say to the buyer, look, you're paying more for this loan right now, but you're probably not as likely to have to refinance later to get a lower rate. And so you're kind of paying forward. Well, that's the wrong way of saying it, but paying in advance the refinance costs later. Then you have to deal with it later. And as much as I like doing more loans and more loans later, I like my clients to not have to do a refinance and take advantage of what's the best opportunity today. And so that's how I convey it is here's the break even point. And then I also like to show like the total savings over 10 years. And Brandon, I've been sending tables out that show total interest savings over 10 years net
Yep.
after the discount points are subtracted of over $100,000.
Right.
Like,
That's
and
crazy.
this isn't being conveyed. And so people need to know this. And so what I love about this environment is realtors are going to have to negotiate again, which is fun. Negotiations are fun. They're fun. And so, um, one way I might think about doing this is if I got a lowball offer. Here's one lowball offer. What do I do with this? Let's go back to that offer and say, would you guys come up to this if my seller's willing to give you this and you guys could get a rate of this instead of what you thought it was going to be? And that could write the deal.
A hundred
It
percent.
could. Yeah. So, and
Because
bring me in, bring Brandon, bring Brandon, bring your loan officer in on that to negotiate that thing.
many, many, many times what sells the home is the payment in the first place, right?
Yeah.
I mean, if you get a $500,000 home and you get a $3,000 payment on it, woohoo, let's go, right?
Yeah.
But if you get $500,000 home and it's 4 grand, like, ah, I can't afford that. So by being able to do, I mean, I love that low ball offer. Like, get a hold of us and say, hey, what can we do for the lowest rate? Because now that low ball offer, I mean, that again, we're starting, we get away from actual what is the purchase price of the home anymore, and let's get to what is that payment for that buyer.
Yes.
And that's where they can make that emotional, happy decision like, oh, we can afford this,
Yes.
right?
I think the other thing that we lose sight of is that we're in this every day, all day, and we forget that most buyers are not as talented with the financial calculator as we are,
Right.
and so they're using these online tools. They're going to the Z machine. I just invented that term. It's kind of Zillow. They're going to Zillow and running the payment, and who knows what factors they're putting in to do that. Is it 5% down, 20% down? Is it 3% down? Does it include insurance? Is it how mortgage insurance is kind of tricky for us. I mean, we have a neat little tool that just runs all the companies all at once, but how do you know exactly what the mortgage insurance factors are and calculating this payment and getting to that and understanding that this is the right number? They may not have the right information, and so I think the point of this is the listing agent should convey the cost of ownership for that property and what options are available for cost of ownership. So that's the whole point, and then having that as a marketing piece. So presenting the information out, and then you have to communicate to the buyers, the selling agent, on this is how it's working. This is how we're getting to this, and I've used this phrase, pre-negotiated discount points. So we talk to the seller. I ask a listing agent, is your client open to something strategic and unique here to try to add additional value and benefit of this property to a potential buyer? And so it's pre-negotiated discount points. We know if this buyer comes in, that the seller will pay 2 discount points to help buy the rate down, and we can market the property with, whatever it is, that much lower of a rate.
I think that's brilliant. I think we should actually hold a master class, a round table for real estate agents on this. I
Hey,
think
you
this
line
would
it up.
be
I'll get my professor bow tie out.
let's
And yeah, we'll do it up.
let's
Yeah,
do it.
yeah.
Let's do it. No, I think there's so much. I mean, we get into one of the things, just do quick, some just basic math, like for what does a discount point mean to the normal person? And real estate agents, this is, if you can relay it in the simplest terms, right? So a discount point, let's say it costs, one discount point is the loan amount. So let's say the loan amount is $300,000. That's 3%, $3,000, right?
3,000.
That's
Yep.
one discount point. And that payment versus par. is, say that equals out to be what, 60, $70 a difference a month.
Yeah, it might be. So one discount point might reduce the rate a 1/4%. So we can get our calculator out and do what's a 1/4% on 300,000, but it might be something in that neighborhood.
Yeah.
Yeah.
So, okay. So
Well,
say
336. It might be closer to 80, 90 maybe.
80, 80, $90.
Yeah.
Okay.
Yeah.
Yeah. I mean, that's more realistic. So let's say $80, right?
Sure.
Well, $3,000 to a borrower, right? If they were like, because a lot of people are like, hey, I'll just put more money down, like lower my payment. And they don't realize how much more money it takes to lower the payment, $50, right?
Yes.
Every $1,000 right now is about $7 a month in payment.
Well, this is exactly why.
$21 versus $80.
Yes. This is exactly why those clients of mine that I've had, instead of putting additional down payment, they end up putting that money towards discount points
I've done
because
that.
they had this conversation and they know.
Right.
So 3 grand in principle would only lower the payment by 3/10 of 70. So what is that? So, well, 15, $20
Right.
versus 80. So there's the bang for the buck thing right there.
Right.
Additional down payment, lower loan amount doesn't get you as far as bringing the rate down, leveraging discount points.
Yeah. And, we're going to put 20% down because I don't want PMI. Well, what if we do 18% down? You got 2% that you can throw towards your rate. And then your PMI is like 22
Nothing.
bucks.
Just you buy it out one time or it's nothing.
You
Yeah.
get one a
Right.
$1,000 for one time, and it just saves you. But your payment is X. So
Well,
just being strategic on being able to show
yeah.
those payments like that.
And not to get off topic, but you know the little hack where if you have PMI, it lowers the risk on the loan. And if you lower the risk on the loan, you lower the rate. And so in some cases, if you do 19% down, the pricing's a little bit better than 20% down. Little hack.
Yeah,
It varies.
it's the
That
same
changes
as
all the
going
time,
to
but
25% down.
some of that
So
stuff. Yep.
yeah,
Changes in the loan level price adjustment stuff. But okay, so I'm a listing agent. My client, the seller, says, Tom, what are you doing? It went on the market 30 days. You told me at the table when we signed the listing agreement, there's the hottest market. Your house is going to sell right away. It's beautiful. Now here we are on day 30. What am I doing? What additional things can I do? Well, let's take a look at your activity so far. So I know you guys, listing agents, you get a report of every agent that is showing the property, their name. Let's outreach to them. Is their client still in the market? uh, what was and the feedback is helpful, but not, you don't have to even look at that. Just call, is your client still in the market? Present the question. What if your buyer had an opportunity to buy this house at a substantially lower than market rate? Okay. I mean, that's some phone calls you could make today. You could do that today. I had another thought and I just lost it. That happens to me sometimes. It's like 47 is, or no, I'm 46 kicking in, right?
right, right. Don't age yourself further.
The listing advantage program was what I wanted to get to. I know we have a
Yeah.
couple minutes left.
Yeah.
I wanted to talk about this and not sell SWBC, but so I've been presenting this to listing agents, kind of here and there, off and on over the last year. This bridging the gap theory of let's market discounted rates. And my company, but unbeknownst to me, I had nothing to do with this, comes out with this program where now sellers can lock an interest rate. And I first saw this and I'm like, these guys are wiretapping me. Like my CEO, Susan's been listening to me pitch this to listing agents. Sellers can lock a rate. And at first I'm like, what am I going to do with this? And then I thought about it some more and I'm like, what better way than to mesh what we're talking about? Where we could arrange this all ahead of time, where sellers could lock a rate, we can market like this rate with the property,
Mm-hmm.
and it's in hand for the buyer still have to qualify, of course, but there's guidelines and stuff to this, and there's a little fee that's refundable, so it can be free for the seller, but you could lock the rate. What I don't know yet is, I don't want to talk about this, but I'm just going to say it anyway. Well, if the seller locks the rate and rates go down, can the buyer just come in and lock their own rate with us? I don't know the answer to that yet, but maybe the seller would probably be out the money, but I don't know how that works exactly. But I think you could probably get best of both worlds doing that. And with uncertainty ahead, and there's always uncertainty ahead, but with uncertainty ahead, if a seller did a lock and then rates went way up, now you got the most attractive house in the whole damn town,
Right.
because you now have access to the lowest rates that you locked. And so the lock can be done for 60 days at a time, and it can be extended, and it transfers to the buyer. We have to do the financing, of course, for that lock to be valid, which I like because that's how you and I get paid.
Captive.
Right.
Get the captive audience. But hey, if you got the product to offer, that's the biggest thing.
It is. And so I had a conversation a long time ago about builder incentives and why is this okay for
Right.
builders to say if you use our preferred lender, you get this discounted rate because it's so important to a builder to close on time. Every day is money. And it's so important for a builder to know that this buyer is actually qualified because you could be custom building stuff, you could customize stuff, and now if you're buyer, the first house I bought, the buyer put green laminate countertops in, green laminate flooring in. They had this whacked out stuff in there, and he filed bankruptcy during the construction process. So I got a deal on that house. Thanks, John Mahoney Construction. I got a deal on that house, but as a builder, you don't want that to happen.
No.
And so the Department of Commerce has said as long as the seller gives something of value. Now a commissioner is going to call me and say, Furlong, what are you talking? No, this is as long as there's something of value that's being given, that the seller can say, I want you to use this lender. And so it's of the interests of the seller, even a private seller, not just a home builder, that the buyer is actually qualified, the buyer's closing on time, you get the communication, all the stuff that we do. And so that could be part of this too, where you could say, we're going to pay 2 discount points to lower your rate, but we have this lock with SWBC and you need to use Brandon Olson to do the financing. And the buyer should be happy about that. I mean, the buyer, it's something actual of values, true values, not a gimmick thing here, true value. And so the buyer should be happy with that opportunity. I don't have any qualms about taking business from other mortgage companies, but really what this is all about for you and I is helping realtors sell the house,
Right.
right? And so I've had some agents say, well, Steve, you do all this for me. What's in it for you? And your answer would be the same as mine is so the buyer takes this financing sheet back to their lender. The lender says, we can do this too. And they line it all up. They write a purchase agreement. The house sells. Brandon gets nothing. Steve gets nothing. But we have demonstrated our value to our business partners, listing agents. And that's what it's all about. We want to help you guys sell houses, and this tool is a unique tool that we have. Like we got this taser tool. You guys don't. You can't market rates. You've got to be the state of Minnesota says you got to be licensed to market interest rates. You can't. You have to have a lender partner do this,
Right.
which I like that too.
Yeah.
You know,
Well, I mean, when you go down this road and you help people like this, I've gotten so many loans from other listing agents, or like half my referral partners right now were listing agents that I did a loan for, and they loved it. And they're like, hey, you know what? Hey, this was unique, whatever. Can you help this person out? And next thing you know, that's how we do the business. So yeah, if we do lose it here and there, I typically pick it up somewhere else.
right?
And it just, but at the same time, we both, and this is what I loved about working with you when we started, was that you're very passionate about what you do, and you just really love helping other people. And that's why you built your apprentice program, like you help other people and grow their careers. So thank you for that, number one.
You're
So
welcome. I've been just thrilled to see your success, and you're paying it forward now. I guess you're going to teach your brother.
yeah, brother.
Yeah.
Yep. He's going to be taking his license probably in the next couple weeks.
All right.
So he's nervous. He's been studying for a while.
Yeah.
But yeah, he's excited. And then, of course, I built my own team, and and so forth, and built a company for the industry itself, and that just is on the verge of signing the term sheet right now. And
Yeah.
yeah, it's fun. So it's been a lot of fun, and this episode's been a lot of fun. So I do want to thank you for coming on the show.
You're welcome.
If anybody out there, real estate agents, if you have and you want further questions, you can call Steve, call myself. Either way, you'll have the information below. But please like and subscribe. And thanks again, Steve, for coming on the show.
You're welcome. Thank you.
Yep.